Hi everyone and welcome back to another video. Today we are going to take a look at HBAR. It has only been 1 week since we updated on HBAR, outlining why we thought we was going to come down to the 6 cents region, and as you can see from our last video a week ago up at around 7.5 to 8 cents, we've finally come back down to that weekly demand zone, what we've been eyeing up. This is the reason we was taking profit up at 9 cents, tweeting out taking profit to be able to utilize those profits down lower and increase the amount of cryptocurrency that we've got without ever having to invest from the bank once again. And that is why we play the market this way. Not many people like to play the market this way, but it removes emotion from the market. We can benefit from every single wave to the upside and downside without having to be worried. So guys, if you haven't already, smash this video a like, comment down below, that really helps, and of course subscribe. Let's get into it. As you can see, back on February the 11th, just tweeting out here for HBAR at around 9 cents that it's always important to at least get your initial investment out, and 150% move to the upside is never ever too early to at least take some profit, manage your risk, buying low and selling high. And you can see here on our chart, we was buying down at the lows 3.5 cents and selling at the highs 9 cents. Now that was not the top. We did end up going to around 10 cents, but you're never going to be able to catch every single perfect move. So 150% guys is never ever too early to at least take some profit. Now this profit that we took at the highs at around 9 cents, we can now utilize back down at the lows because we are approaching that 6 cents region. And if you do the maths on that, we are approaching, at least a 30 or 40% correction to the downside. So just bringing it back to the chart, back here, February the 11th, when we tweeted out, you can see we've had a nice 30% correction to the downside. Now these corrections for people who was not buying the lows, buying the highs, this is going to panic people. This is why people end up selling the lows. Back at a weekly demand zone, you really want to be focusing on trying to sell the supply zones and buying the demand zones. But obviously that means selling when the price is going up and buying when the price is going down. It really is quite hard if you are new to the market and you don't have any plan in place. This is why you really need to have a plan in place, whether that's monthly, weekly demand zones, your own plan. You need to stick to it. You can't be relying on other people to be making these decisions, because it is quite a quick decision when you are going to be buying and a quick decision to when you're going to be selling, because these candles come in fast when they're going down and come in fast when they're going up. And you can see here on this candle, nice big wick to the downside there, back into the weekly demand zone. Now, when we look at bottoms, these wicks, big wicks like this with a nice big candle body to the upside, these never really do mark the bottoms. It's something like this where you get a nice big wick to the downside and then you come in and fill it. They're really the times where people are not expecting the bottom to come in. That's when the bottom will come in ever move. So when we are looking at this wick to the downside, I would expect in the short term or on the lower time frame for us to at least come back down and fill this wick back into that weekly demand zone, get some more long-term accumulation coming in from the big buyers. You can see the big buyers are stepping in already, but I think this candle here would be way too easy for people to spot. This is probably just a little bit of manipulation in the market to make people think, yep, that was the bottom, then come in and sweep those lows, take that liquidity, because you can see here we do actually have equal lows on the lower time frame there, so the market will often come in and take them equal lows back out and then deviate below the range to come back into the range, and then you'd be wanting to at least take some profit again at the weekly supply zone. Obviously the risk to reward right now is a bit higher than it was back at the weekly or the monthly demand zone where we was entering. And this is really why we try and play the long-term swings, taking profit on the way up, being able to benefit from those moves on the way down. Just like we got on the higher time frame move where we got a nice big wick to the downside. I know this was only on Binance and not any other exchanges, but again we came in to fill this wick, deviate below, then shoot to the upside. So again on the lower time frame I would be expecting this wick to be filled, take this lower level here, take all of that liquidity, perhaps move back down to the bottom of the weekly demand zone, spike that fear into the market, and then look to deviate and then move back to the top of the range. That's really what I'm going to be looking for, and that would be why I would be looking to enter HBAR back at the lows here. But again, because we entered at the lows, we took profits at the highs. We are in a great situation here. We can sit back, relax, and let the market do the work once again. But again, as you can see here, what are we setting up here? This could simply be a higher time frame inverse, head and shoulder, more long-term reaccumulation, and your targets to the upside would be much higher at them monthly supply zones that we've been eyeing up since the bottom of the move. So that's what I'm looking out for, guys. Quick, short, snappy update for HBAR here. Seeing a little bit of panic on Twitter, but you don't need to panic, guys. Sit back, relax, and let the market do the work. Obviously, it's not financial advice from me. I'm not a financial advisor, but you know, if you do enjoy these videos, give it a like, subscribe. That really helps, and I will see you next time. Cheers.